What's up everybody? Tom here with another video. In today's video, we're going to be discussing about what the Federal Reserve just did to the stock market. We'll also be talking about our technical analysis levels for the SP 500, Nasdaq, Bitcoin, AMC, Tesla, dollar index, and more. You can see by this fear index that the market didn't like the Fed yesterday. Why? They're looking at raising rates. Stay tuned to find out more. Alright guys, well this begins our recap of the markets for the 16th of June 2021 after the close. And you can see clearly by this heat map of the S&P 500 that things were a little bit red yesterday. We obviously have almost all sectors down and only the banks really enjoyed the news that came out of the Federal Reserve, which we'll be talking about throughout this video. Let's have a quick look at the actual major indices. All of them started relatively aggressive during the day. They were anticipating maybe a continuation by the Fed or possibly it's a retail trap. And then when the Fed came out, Jerome scared the market with a little bit of recovery into the close. That's the thing about Jerome. Whenever he talks, the market always acts poorly. Have you noticed that? It always does happen. XLY, XLF doing the best in the sectors. The reason why: XLY, consumer discretionary, of course, and financials, higher expected potential of interest rates is better for the banks over the longer term. Every other sector was down. Even the defensive sector, XLU and XLP, consumer staples and utilities, were both down as well. So what did the Fed actually say to scare everybody? Well, of course, they signaled higher rates in 2023. Now, it wasn't all bad news, and that's why the markets didn't exactly completely fall over. They're basically projecting that they're going to do their first rate increase in 2023, and this is up from the expectation of 2024 before that. 13 of 18 policymakers foreseeing a liftoff in borrowing costs that year, and 11 seeing 2/4 percentage point rate increases. If you have a look here, this is the expectation for many people in the Fed. Now, what other things did they say that was important in this statement? I think this article probably sums it up the best, and you'll notice that it's generally the same kind of thing that they've always been doing. Most importantly, they are continuing to do the purchases. So this means that in addition, the Federal Reserve will continue to increase its holdings of Treasury securities by at least $80 billion per month, and that's expected to continue. Now, if they took away that as well, it would have been very, very, very bad for, of course, the market. But they haven't done that. They've just basically said, look, we think interest rates are going to go up a little bit earlier. We believe the economy's on the right track. We're targeting 2% inflation. And they've basically said the same thing since every other time. So the markets are getting hit in the futures right now. They've obviously been hit during the session. The fear has increased, but do we need to be concerned? I think they've done enough to probably not completely scare the market off its current bull trend, but time will tell. Let's have a look now at the technical analysis levels. We'll start off here with the VIX, or the fear index. Looking at this chart, you think fear is back, 18.14, and you can see that it just spiked heavily with the announcement from the Fed, went all the way up to the resistance of 19, and then all the way back down, and then all the way back up again. Kind of looks like non-farm payrolls, the jobs report at the end of the month with this much movement. But where I think the biggest interest was the US 10-year and the dollar index. So the US 10-year spiked through. We'll be now watching how it interacts with our downward trend line here, because it went straight through previous support that should have acted as resistance. The power of the Fed showing the 10-year yield is rising. And of course, that's going to be expected after they literally signaled that. Where the biggest move was, though, US dollar. Wow, did it hit our profit and hit the profit target straight away? This was exactly the line that we put in the charts yesterday. It was pretty much exactly in line with expectations. It went straight to the 91.40. It's a strong move from the US dollar initially. I think it's going to be hard pressed to hold this throughout the session. I wouldn't be surprised at all if some sellers come back in. But look at this. Wow, what a big day for the US dollar. Huge movement out. If we put this in perspective, this looks like the US dollar is really trying to now recover back up. I mean, if you think about it, this was the long leg dojis. The decision's obviously been made to go bullish at this stage, and you can see it move through there. Big day traders and scalpers would have come in, pushing this thing to the 91.40. And now we start to play this scenario of what if we have a giant double bottom here with a movement through this peak? What if we now have recovery to 93 for the US dollar? Is it going to be back Is it going to be strong? I tell you what, that is a very huge scenario that could be playing out. So we're at resistance, and for the next 24 hours, I would usually expect this initial sugar rush movement for the dollar index to not be able to hold up. I mean, you can see it here, 2-hour chart, big movement, big movement, big movement. Now it's got to reset the indicators right at resistance. So don't be surprised if this comes down a little bit to reset after that huge move. Now, what did it push? It pushed gold. So these are exactly the same lines we had up yesterday on our charts. And of course, gold got straight through the support and went to the next support line. 1810 was reached by gold. So a bad day for gold traders. I guess we could have expected it, and always did expect it after we got through our beautiful, nice bullish trend line. This is where previous resistance has been, previous support has been the 200 on the 8-hour. You can see the green line here. And it makes sense that it would drop straight into this level. Day traders yesterday would have been taking profit all over $1,810. It's finding a little bit of buying pressure now. If we go down to the 1 hour, we can go and have a look at the price and how the price action's playing out. Now, you don't usually want to catch the falling knife here. I mean, if you're looking at investments, of course, that makes like a lot of logical sense. It also makes sense when you think about where the US dollar is. But I would be looking for lightning bolts here, guys. Structural formations forming on the smaller time frames, or something more, because now what's going to happen is, even if this gold trade goes up, where's it going to find resistance? Straight at the 1842. So this is going to be where previous support was, a level of buying pressure. Sellers will regain control, most likely, of gold here and try to push it down again. So be careful of that. And of course, Fed did this to you, unfortunately, for gold traders. Silver was another one. It's trading from the bottom up right now. If we have a look 4-hour chart, you'll see it clearly here. We've got support, now becoming resistance. It went smash bang through that. Silver's a bit stronger than gold because of the movements going on in the markets in terms of a lot of retailers buying physical silver. But you'll notice it comes all the way down to this 26.50. This is the first level of previous resistance, and people have been buying it. I'd be very cautious on silver here. This is exactly the zone where you could see it turn around. If it gets back into the cage, into the trap, then that will be relatively bullish. Look at this on the daily is probably the big key here. See how it closed below? That makes me think that silver could still decline a little bit further. Be careful very much on silver at the moment. I'm definitely not trading it at this stage. US oil also took a dive back down to the 20 moving average. We'll be watching this like with laser eyes. Obviously 72.80 was hit. That was the first target in our overall length. We had 72 to 72.80 as our first resistance. The second one being 75.76. It's coming back down to the 4-hour 20 moving average. We know this has been an incredible buy zone all the way through US oils or black gold's movement up here. Hopefully it can find buyers after that initial shockwave from the Fed came through the markets. Still the same thing here for that chart. AMC, another interesting one yesterday. We theorized in yesterday's video that unfortunately it was going to weaken throughout the session due to this head and shoulders. We had the left shoulder, we had the head, we had the right shoulder. It obviously opened down. When we were doing the live stream, which we do 1.5 hours early before each New York open session, we actually saw it trading right around this 50 moving average. We were theorizing it was going to go weak. It did go weak. Where did it go to? Of course, our support line, our 52.35, got hit perfectly, and then it bounced off that. The session open will be pretty important. I would say it actually had decent recovery in it. On the 15-minute chart, this is the right type of thing for you to see. Effectively, a series of higher lows and higher highs being formed. And once it clears past this level, which is around, let me just get that price for you guys, about $56, hopefully we can return back to 60. So not the worst day here for AMC. And actually speaking, GME also had a decent movement up. So it's finding strong base at 210 near the close of the day. Notice how there was some volume that came into the market. See that little sneaky bit of volume that came through? I think there's some positions coming back into this, and I've said it for a couple of days now. I believe GME is being forgotten. No one's liking it. And in terms of the meme stocks, it makes sense that if we break past this 240, that you might see some participation back into this pair. So keep an eye on it. I mean, obviously, I'm not a huge advocate of these type of stocks, but if you're looking at them, this is going to be a double bottom at that point if it does occur. And I think it means a lot for the psychology of this pair. So we'll be watching the volume very closely during the live sessions as well. Now, it wasn't all bad from the Fed. In fact, a lot of the stocks that retail traders trade weren't down that much. So things like Tesla was actually up on the day. Held the 600 again, a positive sign for it. Nice kind of close into the end of the day. As long as it holds 600, that's strong. But again, the charts are very, very muddled here. 600 we know is support. 635 we know is where participation comes back into the market. And at this stage, tough to trade Tesla. So it was a good day for some hyper stocks. They didn't all go down. Shopify, some notables, SE, also Enphase Energy. They were all moving incredibly strongly throughout the session with great technicals on board as well. When we move over to the indices, let's have a look at the US 100. The Nasdaq did decline. Why did it decline the most? Well, of course, it's sensitive to US 10-year Treasury yields and Treasury yield spikes. The general thought process is that technology companies need cheap borrowing, and it does help them out. In this case, I don't know if that's such a big deal. Obviously, I've talked a lot about the fact that I don't think the US 10-year is really going to affect the longer-term status of the Nasdaq, but a lot of people disagree, and obviously the market likes selling off on these types of things. It's come down to this level. It's come down to basically around this 13,900 zone, and I'm not sure if it finds support here. I mean, you can see the previous resistance over here. I think it's more likely that somewhere around this 13.8 is where the real true support buying is. So let's say it falls throughout the session for whatever reason. This should be where buyers regain control in the market. If the bears get it under here, then guess what? I actually think we're going bearish for a little while. So we'll have to find out what they do over the next 24 hours. QQQ, big sell-off, big recovery. You can see here that line, which effectively would be the same level we were looking at in the Nasdaq. And it would just basically be going straight back into a 20 moving average and then hopefully bouncing off. Will it be a false breakout to a new high? Time will tell. I think the market reacted pretty positively into the end of the close. And you got to remember, where's Wall Street? They're the guys that buy into the end of the day. What does the retail trader do? We tend to buy at the start of the day. So their pickup at the end of the day, after they had a look at the announcement, by the way, they had time. It wasn't like the market closed straight after the Fed came out and said things. I think that shows that the market was actually not seriously concerned by what the Fed was doing, and they kind of expected it to a degree. So that's a good sign there. Go over to the SP 500, came back down to the daily 20. You can see the bounce off that occurred there. Hopefully it holds this session. This will be the most important chart for us to be looking at over the next 24 hours to see how the Fed is really going to hurt the market. Will the buyers regain control of the market tomorrow? They're going to hopefully do so around this 4,200 and the 20 moving average you can see here. So that is the level we will be looking at. Let's move on over to Bitcoin, because Bitcoin took a tumble yesterday, which we expected. It's come back down to the first level around that 38,000, and you can see the previous resistance here. So I think somewhere within this block, let's just draw the block for everybody so they can see it. Between this high and 37.6, there should be some buying pressure, and we've explained this a few times. One of the reasons why, we've got a series of lower peaks that came through. This created a very serious trend line that will intersect around this 37.60. We also had a very serious trend line on the upside, and on top of that, it gets a little bit better. The pullback here should be very similar to the pullback up here. Where does it go to? Around that 37,600. The other thing, every one of the movements so far has been equal in size or very close to being equal in size. So when you start to see these technicals play out, you know that things are getting better here in Bitcoin. And I would expect hopefully some buying to come off here. And what we're looking for is a little bit of lightning bolt action, a pin bar, engulfing, all these types of candle patterns at this zone. So we'll be watching this very closely throughout the live session the next 24 hours as well. It's right around that support. Does BTC shorts actually start relenting? I don't think so. I think, look, BTC shorts, if you actually have a look at this on the Bitfinex exchange, continues to rise. You can see here the whales are committed to trying to short this Bitcoin at this stage, at least on this exchange from the data we're getting. But overall, it actually looks a lot more bullish. Maybe the whales are fighting a losing battle here for once in their BTC shorts. They usually never lose, but I'll tell you what, they're pushing it back. It's getting to a zone. The buyers will soon show whether they're committed to buying Bitcoin or the whales are going to win. Lots of stuff happening over the last 24 hours, guys. I hope you guys stayed safe. And of course, remember to subscribe, hit that like button if you enjoy the videos, and we'll see you 1.5 hours before the New York Open. Bye for now.